So now we're here at the next part of the program, which is the reverse investor's pitch. So if you're a business looking to get access to capital, which is pretty much every business, because we all need money to get things started, this is the thing for you. So this isn't your usual pitch where entrepreneurs pitch to folks with capital and there was only one winner. In this pitch, we've reversed it a bit. So the investors pitch to you and you'll get the opportunity to hear which investors would be most aligned with you and your business idea. And so you can make the connections you need to make that a reality. So let's get the ball rolling. So I want to welcome to the stage our moderator for this session, Rochelle Grayson. Rochelle is the founder of Mosaic Accelerator and the co-founder of Circles of AI. She's a serial entrepreneur, a digital executive, a recovering investment banker, an angel investor with over 30 years of experience in business, tech, finance, and education. Rochelle launched the Mosaic Accelerator to support and invest in non-technical BIPOC women founders in tech and serves as the executive in residence at the New Ventures BC, where she has mentored over 150 tech startups in 4 years. I don't know when she sleeps, and that's a lot of work. Rochelle is knowledgeable about AI, funding strategies, digital business models, marketing strategies, community building, and the latest tech. She is a member of several Vancouver Angel Networks, a nominee of Canada's Top 100 Most Powerful Women, and an awardee of the Vancouver's Top 40 Under 40 and Vancouver's Top 10 Technology Women. So Rochelle holds an MBA in Finance and Business Policy from University of Chicago, and her career is taking her from New York to Silicon Valley to right here in Vancouver. So, without further ado, welcome Rochelle Grayson to the stage. Are you ready?
Okay, good afternoon, everybody. Thank you for coming. I want to kick it off before we bring on the funders with a little bit of terminology. So on the screen, you will see a QR code. Please feel free to use your phones and download it. And it talks a little bit about some of the words we're going to be using this afternoon. So the first thing we're going to hear today is we're talking about non-dilutive versus dilutive funding. And what do I mean by that? So let's start with non-dilutive. Non-dilutive is if you own a company, how much of the company do you own, right? And non-dilutive, basically the ownership is 100% yours. And you're not giving away any piece of your company, but you might get grants, you might get loans that you can pay back with interest, but the whole company is still yours, right? And today we're gonna have a speaker who's gonna talk about some grants and ways that you might be able to bring in people to hire without giving them a piece of your company. The next one is non-dilutive, and this is when you basically give a share, you give something in your company, and somebody gives you money for that piece of the pie, right? Generally, we find that those would be investors, sometimes they're called angels, and that's what they do. And what you'll hear is equity, but you'll also hear something called a cap table, which is a capitalization table. And what that means is who owns how much of my company? It's basically just a list of who are all the investors. And those investors could even be your employees. Maybe your employees own a piece of your company, of your business as well. So cap tables, ownership, that's really kind of what the difference is between non-dilutive and dilutive funding. Again, all of this is in the handout that I had with a QR code, and if you missed it, it's coming up later, so don't worry. The last bit I want to talk about is early funding stages, or sort of equity funding stages. You will hear that different people raise at different times, and these are terms that you probably just want to be familiar with. And it is a journey. And the first part of that journey is friends and family. So we might get some money from our friends and family. That's the first stage that you will get. The next stage is called pre-seed stage. So you'll get a little bit more money, generally from other people who may not know you at this point. Then after that, it goes to a seed stage. And then we have what we call lots of series. Series A, Series B. You'll hear C, D. Sometimes people have Series G, depending on how many times they go around that. And often the amount of money that you actually raise goes up with each round. So family and friends is going to be the smallest amount of money that you get. Pre-seed is a little bit bigger, or maybe a lot bigger than seed. And then always the series will get bigger and bigger. So there you have it. And generally when you are raising money, every stage you're going to get you're going to give up about 10 to 20% of your business. That's sort of the general understanding. Now things can change, but that's a ballpark figure. Now, one last thing that I want to talk about is smart money versus dumb money. And I think there are a lot of people like, huh, what are you talking about, Rochelle? But smart money is the money that most business owners and entrepreneurs want. It is the money that actually has not just cash with it, but networks. It can open doors. It can actually get you to customers. It might be someone who really has been in this business before and done it and knows just exactly what to do, who to talk to, get you the permits, whatever the case might be. That's smart money. Dumb money is just cash. And that's great. Sometimes that's all we need, but you'd be surprised actually having someone who can open doors for you can be really, really helpful. So we've talked about that. There is the QR code again, if anyone's missed it, to download some of the terminology. There are a lot more there, but we're now going to bring on our investors to reverse pitch. So without further ado, let's get started. Okay. The first person coming up, I'm just going to let her introduce herself and talk about her company. It's Sherry. Go for it, Sherry.
Thank you. Thank you, Rochelle. And hi, everyone. I am Sherry Zhao. I'm with MyTax. We are a not-for-profit across Canada. And from the picture behind me, you can see we're operating coast to coast. What we do is we give out grants. So coming back to the introduction piece, we're giving out non-diluting funding. What we do exactly is for businesses like yours, we help you get connected with post-secondary institutions, colleges, universities, to hire students to work in your business on R&D projects, research and development projects, or business-related projects. And the way we deploy it is to match your contribution. So you only pay half of the contribution to hire the students to work with you for your projects. In BC, we are very well funded, so there's no upper cap on how much money you will be able to get from us. The minimum requirement is a $15,000 4-month placement with a student. And the project can be varying from different sectors to sectors and different disciplines. What I really would like to encourage you to hit me up, and my team will be more than happy to chat with you on your business needs to find a student that's suitable for you. And welcome to the next one.
Okay, thank you so much, Sherry. Yay! All right, next up we have Daryl. Yes, you can grab a mic and go for it, Daryl. And the clicker. It's on. It should be on.
Are we on?
Yep.
Hi, I'm Daryl Hatton. I'm founder and CEO of Connection Point. Make sure we're up. Connection Point is a collaborative commerce platform. We help people raise money for almost any kind of cause. So far, we've helped raise about $325 million for about 200,000 projects. Now, these projects go through all sorts of different markets and segments, anything from charitable to entrepreneurial to creator. Now, if you take a look, everybody goes, what's collaborative commerce? Collaborative commerce is people working together to solve a funding problem, usually a company and a community and sometimes a consumer that is trying to help raise money for this project. So if you think about something like Amazon, Amazon is a marketplace where people sell stuff through. Connection Point is more like the technology behind other companies like Shopify, where they're enabling your business to have your own online presence like an Amazon, an online storefront. We take our product to market using 4 different vertical solutions. So we have Fundraiser, which is for personal and professional charity. It's like a GoFundMe. We have CocoPay, which is about paying for healthcare using crowdfunding, getting help from friends and family if you have a major financial issue because you've had a medical condition. We have Crowdfunder, which is like Kickstarter or Indiegogo, if you're familiar with brands like that. That's for funding creative projects, helping pre-sell comic books or movies or getting the funding available for your your album or your new product line. And then we have Pet Funder if you're funding your pet care. So one of the key things about our platform is as we said, we can help fund for anything. And Rochelle has got her Mosaic, and she is using our platform to help a community of BIPOC organizers fund their business. So check us out, ask us questions about that.
Thank you so much, Daryl. Awesome. Let's give him a round of applause. Awesome. Next, we have Trieste, who's coming up. Trieste is with Front Funder. Go for it.
Hello, everyone. Thanks for having us today. I'm Trieste, the head of campaigns and marketing at Front Funder, and Front Funder is Canada's...
Trieste, a little closer. Mike, bring your mic. There
Sorry,
you go.
a little
There you go.
closer. Leading equity crowdfunding platform, and we enable companies to raise capital from everyone. So what does that mean? That includes traditional sources of funding, friends and family, business associates, angel investors, venture capital, but also more of those non-traditional sources that people might have not considered. So raising from your customers, raising from partners and suppliers of your business, raising from your social media followers, and so much more. So as Front Funder, we've been in the market for quite a few years. We've helped raise over $200 million across 25,000 investments through 175 raises or campaigns from over 40,000 investors. So with that, most businesses have an untapped investor pool that they've overlooked as a source of capital, and we're here to change that. So we are industry agnostic. We work with companies from all different sectors and industries and across all stages of the funding life cycle. So Rochelle did a great job highlighting earlier from the friends and family stage all through to a Series A. We work with companies across their entire funding life cycle. And in terms of the profile of a lot of the companies we work with, we're looking at companies who raise between $250,000 to over $1.5 million. We look at companies who have strong communities of passionate supporters that they want to convert, companies that want to increase their brand awareness, as well as drive sales and revenue growth at the same time as raising capital. Oftentimes, companies think it's a choice. You have to do one or the other, try and drive sales or try and raise capital, but you can actually do both at the same time. And companies that are looking to validate product market fit and really just share more of their story. We like to call equity crowdfunding community capital, where you're really, as your business, raising from your entire community and all the individuals that may include. We've worked with some of Canada's largest corporations and fastest growing emerging startups, and as well as that, just really work with companies that have a great product or service, a very passionate community, and for those who are looking to tap into even greater sources of capital. So if you have any questions, I look forward to hearing from you. Thank you.
Thank you all. You can have a seat there. So thank you. So now we've heard a variety of different models. We're going to bring up another panel, but before we do, does anyone have any questions for our panelists here about crowdfunding, about the MyTax program? Does anyone? Yes, go ahead. Go for it. Hold on. I'll just give you my mic. Let's go. Oh, you got one? All right. He has one for you. Go for it. Yes.
Just, I have a question with Front Funder.
Yeah, Front Funder. Okay, go for it. Yes.
What does it cost to use your service?
Great question. So we do charge upfront fees to come and use the platform and go through our due diligence process. So typically that starts at about $5,000. And we also help with any legal documentation that may be required for the raise. And at the end of the campaign, we take a percentage of the raise. So usually that's around 6 or 7%. And that basically our success becomes your success. So we'll take a percentage at the close of the campaign.
So basically, again, just to restart $5,000 to sign onto the platform, but that's actually to make sure that all the legal things are done. And let me tell you, legal fees are a lot. So this is still a good bargain to do that. But yes, this is, when you're dealing with other people's money, we have to be very careful. We can't just take it. And then if you are successful, well, they benefit as well. So they want you to be successful because that's how they make their money, right? Not any other questions? Other questions? Yes, go for it.
Hi, I'm starting up my business. I'm hopefully going to be called Sylvia's Incorporated. As Sylvia's me. And I'm wanting to have help with fundraising. I'm planning to get help from the DBC, BDC I meant, and when they told me that they can help me with funding, I just bawled. I'm like basically an entrepreneur or a self-employment. So I was wondering who can help me out with funding. Do you guys do that?
Well, okay, so I'll start because I can also help you out with funding because I work with entrepreneurs and help them build their funding strategies. So you
Okay.
can figure out which one of these is the best tool. So I probably am the first person you would want to talk to before you decide where
Do
to
you
go.
want my number or email?
I will afterwards. When I get off the stage, I'll come and find you, and we can then
Okay.
exchange contact information. Okay.
Just come and find me.
I will find you. Absolutely.
Thank you.
Yep. Okay. Thank you. Great. I'll pass them along to the right person. If you want to speak to it.
You want us to take it on?
Yeah.
Well, see, I think you already had the best answer, which is that one of the things you have to understand is which paths are available to you for funding and which ones are most appropriate for you for the stage of your business, the stage of your idea, the kind of revenue you may have or may not have yet. And so working with someone like Rochelle, you can help work through those questions and get a strategy for where to go, and then come to one of us for the help on moving it and actually executing on the next step of getting that funding. But that strategy piece, the planning piece, very, very, very important that you don't try and skip over it.
Great. Thank you. Okay. Is there any other burning questions? I have time for maybe one more question. If not, let's thank our panelists, and we will be around afterwards, so you can definitely come and talk to us one-on-one, okay? So thank you, panelists. You can just leave your mics there, and we'll bring up the dilutive funders next. And so we have another panel. So first up, we're going to bring on Vivian Wang. So Vivian, if you can come up. Where's Vivian? Okay. There you are, Vivian. Come on up. Yeah, you can come up. Well, you can. Yep, sure. There you go. All good. So you can grab a mic. And
Test. Okay, amazing. All right, I'm very happy to be here in this lovely rainy Vancouver afternoon. My name is Vivian. I'm here representing Nimbus today. So Nimbus is a venture capital firm based here in Vancouver, BC, and we are a little bit different than the rest of my peers here in a way that we are a thematic investor, meaning we only focus on one sector and one sector only, that is health. So our mission is to lead investment in emerging digital health and health technology companies and improving overall health for everyone through Canadian-led innovation. So anything for us in terms of investment scope, anything in health is technically in scope for us, but our bread and butter is really digital health. So if you have a company that is doing anything related to health, please make sure you come and talk to me afterwards. So we call ourselves early stage investors, and Rochelle and I are talking about what does that mean. So for us, that means that we want to be the first institutional checks for a company, right? So before you talk to us, you probably have raised some angel money, you have some market validation on your product and solution already. Our check size is anywhere between $250K to $1 million, and we normally reserve another $1 million for follow-on investment as well. We also have a generator space where we provide free co-working space for some of the early stage health tech companies in our ecosystem as well. This is our team. We're a fun-loving team, and but we also really enjoy supporting early startup ventures and the founders in Vancouver. So yeah, if you're doing anything with health, make sure you come and talk to me afterwards.
thank you. Let's give a round of applause for Vivian. Great. Vivian, you can have a seat. And next up, we will have Davina. So Davina, why don't you come? I'll hand you your mic. Here's a mic. And here's a clicker. Green is forward. Okay. Go for it.
Hi everyone, my name is Davina McPhail. I work for Spring Activator. I'm a program director of programs, so excited to see you all. And so Spring, we are active in the impact investing space in Canada. And so, in the same spirit as Rochelle, in terms of kind of explaining a bit of jargon, impact investing is really about providing returns to investors. So, investors who are looking to make an investment, a dilutive investment in a company, and so is looking to make a return and so earn money from their investment. But they're also looking to create some impact and so to have some impact on society in certain areas. So there are many ways that you can have an impact, either climate, either health innovations, and Nimbus is one of the ways to do that. Also the future of food. So that's what, we put in touch investors and founders so that investors can, invest, make some money, but also make a difference in the world. So that's what we do. And so Spring, we have three main ways that we can provide support to founders and investors in their impact investing journey. The first one is our Spring Activators, so our programs, where we train founders and investors about what it means to be an investor. And so both sides, I would say, the founder and the investor get some learning about what does it take to raise some money? How do you build your material? How do you build your tools to raise money effectively? And then with the possibility of getting also an investment. And then we have also a Spring Collective. So that's an angel community of people who are interested in investing also in startups. And every month we introduce founders to pitch to our investor community. And so also I think there was a question from Rochelle when we prepared. It's like, okay, like you're saying you invest, but how much? Mm-hmm. What's actually the ticket size, which is also one of the jargons we have. And so, usually in our program, so the first one, we invest around $100,000. Through the Spring Collective, it's similar amounts. So it's around the 100K mark in equity investment. And then we have our Spring Impact Capital, which is an actual fund where instead of putting founders in touch with angel investors, our fund is actually making an investment directly from the funds that have been raised by Spring. So all of these, the three different, I would say, verticals, we invest $100,000 for the fund up to $250,000. But usually the founders are like raising $500,000 to $1 million, and we are a small part of that raise. So this is the type of level that you need to be at in terms of how much you're raising to kind of come to us and to work with us. So very quickly, I know I'm a bit over time. So these are a bit of our stats and the types of funding. We've supported founders for the past 10 years. And these are a few of the companies that we've supported. I just thought one interesting piece in terms of education. Here you see on the slide, it says 10x, 5.5x, just to say that this is how investors look at a company when they decide to invest. They think of how much actually are they going to be able to increase their initial investment. So I just wanted to share that for education purposes. And then you see also co-investors, which means, as I was saying, we take a small part. So it means we co-invest with other investors. We don't do it alone. And so these are sharing a few of the people there, because when you're fundraising, you actually have to speak to a lot of people. And usually you would close a round with several investors. So yeah. So if you want to know more, check us out. This is a QR code, and so you can see what kind of programs we have and when you can apply and be part of them. So I don't want to be too quick,
yep. No,
so people can take the photo.
Yeah.
If
there
they're
you go.
interested.
Yeah. Well, why don't you sit down and then June 11th.
There's just the last one. It's kind of, this is our the finale, June 11th. Of the Women-Led Impact Investor Challenge that we have currently going on now. So encouraging you all to meet.
Nice. Thank you. Okay. Next up, we actually will have Safe. Okay, so just grab a mic. No, he has, then the clicker. Yeah. There you go. Okay, it's on.
Hello. Yeah. All right. I don't have a presentation. So my name is Saf Hashmi. I'm with the BDC. I earlier heard someone asking about BDC. So BDC is Business Development Bank of Canada. It's a crown corporation, which means it's owned by the Canadian government. It's a development bank. So our purpose is to support founders in the community and the economy, at the same time doing it sustainably. So we do this through investing in entrepreneurs, through our equity, which was the dilutive side. But we also do this through non-dilutive, which we were talking about earlier. So BDC is actually more famous or well known for the non-dilutive side. We manage around $40 billion on the non-dilutive side, which is different kind of programs for founders with different kind of background. And then on the equity side, we manage around $9 billion, which is meaning that we invest into companies, we take equity stake. The kind of companies we invest in, it varies. And the stage of companies also, it varies pretty much. If you're starting off, like you're a solo founder, you have a solution within BDC. Like either it's through dilutive or non-dilutive. On the dilutive side, there might be a loan that is for solo founders starting off a business. And on the non-dilutive side, there's something similar like that. So in short, BDC is out here to support founders. It takes a lot of pride in doing that. More recently, we've also gone above and beyond in supporting underrepresented founders, meaning BDC launched a Thrive program, which was to support women founders. We have one of the biggest, and we were one of the earliest to launch a fund that was dedicated to investing in only women founders as well. This was launched back in 2016, and it's one of the biggest ones. So that's on the equity side. On the dilutive side, non-dilutive side, we have products to support underrepresented founders, including women and Black entrepreneurs as well. So if you go on Google and you search up BDC and Black entrepreneurs, there's a dedicated web page that has all the resources, all kind of products that are available through BDC. If you're an underrepresented founder, are listed all there. And there are resources around like learning about jargons, like different kind of investments, how do you start a business and all that kind of stuff. So there's a lot of resources. I highly encourage everyone who wants to learn more about BDC and how they can help you guys to go up to bdc.ca or look it up, BDC Black Entrepreneurs, and get that.
Thank you so much. Awesome. Have a seat.
Yep.
So does anyone have we have a few minutes, just probably a couple of questions, but anyone have a question for BDC or Spring or anyone about, hey, we all want money, don't we? Yeah, we all want to get some money. Come on. So, yeah, money is good. Money helps us grow. Okay. So, yep, go for it. Yes.
Hey, how's it going?
Good.
I'm just curious to know how do the bigger banks approach companies that are more in the creative field that don't have a direct impact on people but empower other businesses to be able to grow? I have a film production company, and some funding would really go a long way. So I'm curious to know how the banks approach creative field.
So on the equity side, if you are further advanced, so we have a private equity arm within the bank that supports mature businesses for growth. All right. And then within that, there's also growth and transition. So for example, you're a much later stage company, private, and you want some cash. You don't want to sell off the entire business, but you just want to do a little bit of you need some cash. So there is a growth and transition, like how do you transition your business? There's those solutions as well. So those are for much more mature companies. So if you are a business that's kind of doing something that's related to other businesses, but it's a proper business you've got and it's a mature business, then yes, there is a solution around that. So that's one. On the equity side, we're investing in the technology companies. So we're investing in innovation. So if you're a film in the film industry and you have, let's say, new camera technology that's like revolutionizing how films are made, that's very interesting for the equity side. So equity side is more on the innovation, whereas on the non-dilutive side is where this would probably fit in.
Thank you very much. I appreciate that. I hope I can grab your contact.
For sure, yeah.
Yeah, so we'll all be available in that corner there after we're done. So please come by and ask us questions and get all of our information, okay? For sure. Thank
you. For your time.
Any other questions? Just a quick one, if anyone wants to field it, but like, what makes someone successful in getting, funding? And I know that's a hard question, but what are some of the characteristics that you see?
Yeah, I think so. Building relationships with the funders early and kind of get them to know you and get them to see the way that, how are you building your business? How are you dealing with difficulties? Of course, I think that's a very important piece. Of course, like having a sound business that's kind of promising positive returns will be important. But I think beyond that, on the soft side, that's an important one.
Yeah, so really that's a great takeaway. And I just want to highlight, start talking to funders early, often before you need it, because they don't move fast. So you want to make sure that you have enough time for them to write that check, and that they get to know you, because business is about relationships. So that's no different.
I'll just add one thing. It's about relationship and getting to know them early, but a lot is also about your story. I think it's very, very important that before you go and talk to any investor or any kind of funder, you craft your story. Because that 1 minute or 2 minutes you might get to talk to them, the way you pitch, the way you present your story, it's super critical. And everybody has a good story, especially underrepresented founders. They've got adversity in life. There's some situation you've come across. So use that to your strength as a part of your story and build a story around it. Like, why are you doing what you're doing today? What motivates you? What keeps you up at night? That is such a critical part in early stage funding. Like any sort of funding, whether it's loan, whether it's equity, that is so critical. So I would say the story is a very important part.
Excellent.
Yeah, I totally agree. Story is definitely very important, especially when you go to the investors and you want to grab their attention. Another thing I think that's really important is show your traction, right? Like show what you have done with your business. How much of revenue you have. What's the customer? Maybe you have a list of customer waiting for your service or product. So any of those things are really, really attractive to investors. Because that really demonstrates there is a product, market, and founder fit, right? So those are really the three things. Product, market, founder fit is what investors are looking at.
So definitely think about, and I know some people go, well, it's going to take me a while to get my customers. Build community. You can build a community for almost nothing. And I mean, time takes time. But if you have a huge community, I work with one founder, they haven't gotten to the market, but they have 1,800 people who have expressed interest in what they're doing. That's early traction, right? So there are things you can do to build that community first before you even start going to market. And then hopefully there is that product market fit. But there are things even early entrepreneurs can do. So don't always wait until you have 1,000 customers. There are other ways to also show there's a need. Okay, with that, I will wrap it up. We will all go over there in the far corner. Thank you all for your time. Thank you for listening, and hopefully you took a nugget or two away. And I really appreciate all of you being here. I wish you the best of luck with your ventures, and hopefully you can get lots of funding too. Thank you. Bye-bye.